Thank you once again, everybody, for joining us for this afternoon session of AQUMON's webinar, Understanding ESG Investing for a More Sustainable World. So today you have myself here, Caroline York, the head of corporate communications and also the head of our ESG committee, newly formed ESG committee. And then we also have invited here Dr. Arthur Lay, our chief economist and lead quantitative researcher for AQUMON. So today our agenda rundown would be pretty straightforward, actually. We'll go through maybe just a quick introduction for those who don't know AQUMON already. And then what we're going to do is we're going to go through what is exactly ESG investing. Maybe we'll go into the reasons why we should invest in an ESG portfolio, how to rate, and in fact, how to even think and consider whether or not ESG is something you should put into your consideration if it's even profitable, right? Ultimately, that's what we want on all of our investment returns. Then next, we're actually going to go a deep dive a little bit further into the ESG market, its scoring, its pitfalls, what investors should really be looking out for. And through this, we're going to touch point a little bit about AQUMON's own ESG scoring system, which is a little bit unique. So you get a bit of an insider's peek into this. And then we will go into some trends for 2022 that everybody should have a look into. And finally, we'll summarize the entire presentation for you guys, and we'll open the floor for some Q&As. So without further ado, let's go forward. So today, to engage all of our participants, we've decided to come through with a quick poll and survey. So within the quick survey, just wanted to have kind of like a brief overview of whether or not you guys have invested in ESG portfolios, what criteria, if you do invest into ESG, do you actually take into account through your investment decisions, and why do you take these ESG issues into considerations? So I'm actually going to launch this poll. Would be great if everybody just answers it and gives us some feedback. So I hope everybody is able to see the poll coming through. Okay, so first off, not a lot of you guys have invested in the ESG now yet. Okay. Oh, all right. I guess it's a 50-50 mix at the moment. Let's see, what are some of the top criteria in terms of ESG investments? All of the above: environmental, social, governance. Environmental seems to be taking the lead at the moment. And why do people take ESG issues into consideration in our investment analysis? So it seems positive impacts comes up on top as one of the reasonings. Then we say that there's a bit of everybody hopping along the wagon because it's an investment trend. And we got some voters for demand for data transparency. All right, that's great to know. Thank you, everybody, for partaking in this poll. Let us quickly now move on to the next page. So let me share the results with everyone. Oops. Okay. So let's start off with a little bit of a brief introduction. By the way, just wanted to check with everyone on the audience floor. Do you guys actually see my screen with any problems? Do you see the poll still floating around? No? All right, then we can continue. All right, so first off, let's talk about AQUMON. What is AQUMON? Hopefully, those who have joined us today have heard about us before. AQUMON, we are a smart investment platform. So what we do is digital wealth management, and we hope to be able to make investment services simpler, smarter, and more accessible through the latest technology and the latest developments in the fintech area. All right. You guys could actually find us on the App Store. So we do have an AQUMON app. On the baseline of it, we provide robo-advisory services. For those who don't understand what that is, it means we automatically help you choose a very, very comprehensive portfolio if you want to invest into global assets. And we do this all through data crunching, all through AI algorithms. And ultimately, what we aim to achieve is you just need to click with your preferences and we go, voila, here's your portfolio. That's a simplified version. We also do 24/7 monitoring and checking all the markets and readjust for you as well. So everything is automated. So check us out later on. If you have any questions, you can always pop back. Right. We're just going to go, without further ado, we're going to go into ESG investing. So as everybody knows, ESG investing is a huge topic right now. I'm sure those who read Bloomberg, all the news outlets, you'll realize that this is one of those topics you really can't avoid. And I think that is for the better of the global planet and the global industry as a whole. So what exactly is ESG investing? An overview. ESG investing, it necessarily means it's actually sustainable and impactful investing. And it looks into 3 different categories. It looks into the environmental side of things. For example, when we look into a company, we'll be looking into the resources that they use, any carbon emissions. We also look into some issues of how they're using innovation to kind of keep their wastage levels down. So everything, factors that should look into the environmental impact a company has. So secondly, the S represents social. So the social part of it, we're talking about the workforce, human rights, diversity, community, the wider community, social outreach. How is this product actually helping society as a whole go forward? And ultimately, we should be responsible, or these companies should be responsible for the products that they produce so that there's no harmful effects, right? I mean, these were the days of Chernobyl, chemical spills, all of it. So now we're actually all grouping that into one of the criteria when we look into investing into a company. And finally, we look into the governance of a company. So what we're talking about is who the management are, is there anyone to keep their checks and balances, their powers, ethics, and also what are the stakeholders, whether or not they have inclusion on board, do they have risk compliancing on board to make sure that their company is sustainable in the long run. So what we say, a company has a strong ESG, typically we would also say they should receive a strong ESG rating from third party. However, as we'll get into later, there's a lot of nuances in there. So this is when we're going to invite Dr. Arthur Lay, our head of quantitative research, here to talk to us a little bit more about this. So first question first, what exactly is happening in the world of ESG? We all know it's a super, super hot topic, but Dr. Lay, can you give us some feedback on what the market is looking like at the moment?
Yeah, sure. Thank you, Caroline. Thank you, everybody. So here we have several observations. So first of all, there are ongoing ESG movements around the world. As we can see that not only developed countries care about the ESG issues, but also developing countries like China pay more and more attention to ESG issues. For example, China aims for its emissions to reach their highest point before 2030 and for carbon neutrality before 2060. Also, China's Ministry of Ecology and Environment proposed mandatory environmental information disclosure requirements for companies in October 2021, and hopefully this can be done by 2050. So this type of ESG movement has been improving the data quality of ESG investing and accelerating global ESG investing activities. And so if we look at the ESG investments worldwide, now we have around $2.7 trillion in the AUM of ESG investing by 2021 Q4, and most of the ESG investing takes place in Europe with an AUM of over $2.2 trillion, and the AUM of ESG investing in the US is around $0.4 trillion. However, the size of ESG investing in the rest of the world is still small. It's around $100 billion. Although the size of ESG investing in Hong Kong is quite small, as traditionally we know that investors in Hong Kong care more about the fundamentals of firms. We have observed that there are more and more ESG products established in the last few years. For example, we have AQUMON's Hong Kong ESG stock portfolio, AQUMON's Better Future portfolio, and we also have ETFs such as Haitong MSCI China A ESG ETF. So, from a forecast by Bloomberg, it is expected that we will have around 50 trillion US dollars AUM by the end of 2025. That will be 1/3 of the whole asset management globally.
Wow, I think that's incredible. So we're going from what, 2.7 trillion to 50 trillion by the end of 2025. So what, in 4 years time? Well, actually 3 years time now, since we're in 2022. That's a huge and impressive growth. And it's going to take up, you said, 1/3 of total assets being managed. I guess it is really a trending situation.
Yes,
all right.
A lot of friends of mine, they are talking about ESG investing. They transform from the traditional mutual funds industry to some type of ESG investment.
Yeah, well, I'm very glad that we're actually going to do a huge deep dive into this topic today. As everyone in the audience would know, then this is a huge market that we're about to embark on. All right, so let's move on to the next slide. So I should say Professor or Dr. Lei, why exactly should we invest in ESG portfolios?
So from a big view, big image, we should say that the Earth is facing many serious and irreversible environmental problems, like the type of global warming, biodiversity reduction, and a resource shortage. So we need to do something to protect the environment. And also, there are many social problems we are facing, for example, gender equality in many of the developing countries, even in the developed countries. And we have the product integrity problems globally. So we need to deal with these type of problems. Companies solving ESG issues will have greater development in the future. For example, as we observed, most of the best performing the firms with better ESG performance, they will have a longer growth in their earnings and no variance in their earnings. So invest in the ESG firms, we will also have these type of profits out of these type of investment. And when we know that this type of investment can be sustainable in the future, and we can also see that the investment in these type of ESG stocks, the volatility is significantly lower than the other type of the rest of the stocks.
I think maybe later we can showcase some of these different ESG returns and volatility as a comparison so the audience can have a better look at it. But I completely agree. I think, you know, even though our power may be little, the size of our wallets may also be little in compared to the global scale, but every little bit counts. So putting your money where you actually genuinely believe is making a difference. I think if each of us, small as we may be, put all this power together, then for sure we will actually contribute to some great impactful and positive changes. So moving forward to our next question, is ESG profitable, right? I mean, we have the money where our heart is, but ultimately we would still like our money to grow. So as to your point, right, how is it looking for these ESG investments in general?
Definitely, I think investment in the ESG firms can be profitable. As you can see in these slides, on the right side, you can see the comparison between the S&P 500 and the like iShare ESG Aware MSCI USA ETF, these type of comparisons. and we will have say, and the other ESG indexes, and you can see that ESG is actually performing well, and of course this is for 2021, and we know that S&P 500 is quite strong, and for most of the ESG indexes, they are performing good, and in the last, for example, in the last 5 years, you can see the MSCI World ESG Leaders Index is outperforming MSCI World Index.
Well, this is reassuring to know that even though I have my heart in the right place, my money's also making a buck for me. So that's great to know. I think it's because also the underlying companies that all of these funds track, they generally already have quite good systems in place.
Yeah.
Yeah. All right. Okay. So let's move on to our next question. So in terms of this ESG metric situation, right? We understand that everybody's talking about ESG. Yet, what are some of the pitfalls? What are some of the problems and issues and challenges that ESG investing currently faces?
So, as you mentioned before, that we have now ESG comprises of 3 pillars: environmental issues, social issues, and governance. And under these pillars, we also have several issues. However, it is hard to quantify all ESG issues, and it is a little bit hard to have the data for the measurements of these issues. There are several reasons. So first of all, we do not have a standardized methodology for data collection and analysis. For example, we have over 200 sets of standards. There is no unified ESG reporting standard all over the world for major markets. Ideally, I think one standard should come, one good ESG reporting standard should consider the detailed construction methods for each measure of ESG issues and the suitability of each measure to each industry or even each business form. Because we know that, for example, high-tech firms or internet firms, they do not have the issue of, say, waste dumping, something like that. And ESG reporting is also costly for small firms. So as we observed, most small firms they are not willing to report their ESG performance. And also, ESG surveys, or right now the sustainable reports by the listed firms, they only care about whether they conduct an ESG behavior or not, but they do not report the quality of their ESG behavior in details. Therefore, I think it is hard for us to evaluate the quality of their ESG behavior, and also for some of the say ESG evaluation systems, they include device businesses such as gambling, military, and defense, something like that. And also we have greenwashing problems here. So as I mentioned, listed firms in their sustainability report, they only say that they conduct this ESG behavior. Therefore, they do not need to conduct it in a high quality. Therefore, they only say that, okay, we do this, and because they want to pretend that they are an ESG performing firm. So this is the type of greenwashing issue.
Yeah, I mean, I think perhaps a lot of the audience may resonate with me when I say, ESG, a lot of companies say they are ESG, but if you look through all the different standards of data and the reports they come through, they're all tracking such different metrics, right? It's really hard to consistently say without deep diving, really deep diving into each company, whether or not you are ESG compliant, right? And also ultimately, like, who says that you're ESG compliant? Although I do believe there are some changes in the industry coming along. Granted, ESG is still quite nascent right now in its development. Do you happen to know, Dr. Lei, how long it's been like since we actually started tracking ESG as a metric altogether?
Frankly, I do not have the exact number, but when I was studying, when I was pursuing my PhD degree, I helped the Hong Kong CPI Association to conduct the ESG or sustainability reporting quality evaluation at that time, and it was quite difficult to do the task because their reporting, so the reports are quite different, and we in the end, actually the theme becomes to not evaluate the quality of their ESG behavior, but the quality of their reporting, whether they have these these issues within their report or not. So it is quite hard.
and obviously, if everybody is riding along the trend, everyone's just sticking that ESG label onto their companies and being like, yeah, we're ESG compliant because we publish some things. It may or may not be verified, but hey, now we've got ESG, we can get onto all these government initiatives, right? So I think that's what greenwashing is as well. All right. So moving forward then, why the question here that we have is, how do we then look into ESG when all the numbers and the statistics are also convoluted, right? How does AQUMON process all this information? Granted, we have a really strong algorithm engines, you know, we still have to feed them the right data sets. So why don't you walk us through a little bit of how we do this?
As everybody here can see in the slide on the right-hand side, we have the framework of our ESG scoring system. So basically, so for the light pink ones, we have actually that is the scoring system or the framework. So we have we have several ESG pillars, right? And within each ESG pillar, we have several ESG issues. So how do we weight the ESG issues to have an overall score? We have to put weight on each ESG measurement. So the problem is that there are two ways to think about this problem. One is that we have, for each ESG issue, the importance for each ESG issue is different within the whole ESG issue universe. And the second thing is that the relevance of one ESG issue to a certain business firm is different. For example, as I mentioned before, internet firms, they do not have the problem of waste dumping. Therefore, for AQUMON ESG scoring system, we decide the weight of each measurement based on the importance of the ESG issue and the relevance of that ESG issue to a certain business. Therefore, within our scoring system for each industry, actually the weighting system is a little bit different. This is the whole framework. And for each measurement, we use the raw data that we collected from different data sources, and we try to make them comparable to different measurements. For example, we need to make the carbon emission measurement to be comparable to the like gender quality, this type of measurement to be comparable, and then we need to scale them to the same range, and then to make them addable. And that is the two part of having the scoring system. Afterwards, we just weighted average them together, and then we can get the ESG score for one firm within a certain industry.
So my understanding of this is basically because we can't compare apples to apples in terms of an ESG scoring, because it wouldn't be fair for a company to charge them on, I don't know, carbon emissions if they don't necessarily, if that's not their main focus of business, or they don't actually generate a lot of carbon emission. So naturally, they would have less carbon emission, right? Let's just say Tesla, for example, they are doing energy, battery run energy. And so in that case, if we put them in the same category and give them the same rate weighting for like another different industry altogether that produces a lot of carbon, let's just say any of the farming industry, agriculture, then it wouldn't be a fair comparison. So you're saying that the weighting system actually takes into account and then balances this out, right? All in the back end and all through all our sophisticated algorithms and data sets.
Yes. And in the end, actually, we exclude those vice businesses such as tobacco, gambling, and non-renewable energy.
I think there was an interesting question from the audience about whether or not the evidence shows that these brown firms actually earn higher expected returns in the long run than fully green firms. Do you personally have any thoughts on that?
In fact, if you look at the historical performance, of course, by periods, some of the, say, these type of thin firms, they have better performance than the pure green firms in the past. However, if we look forward in the future, as we mentioned, that governments and the society are taking more actions to deal with these type of environmental issues and the social issues. Therefore, firms are forced to conduct these type of ESG behaviors in the future. For example, in the future, we will use more renewable energy than the fossil energies. Therefore, these type of renewable energy firms will definitely have better performance than the traditional type of energy firms if we look forward.
So I think ultimately ESG is for the longer term. It's much more for the forward thinking of, I think the more people get on board of this train of ESG, the more we can actually propel the companies to innovate, to get creative, and to really think about how to make all of our businesses run for the long term without the detriment of wrecking our global planet as we stand. All right, so moving on. Actually, you know what? We have a lot of different questions coming in, and I think we will definitely try to answer them one by one at the end of the presentation. But if they do crop up during our presentation and it relates to it, I'll pop it over to Dr. Lei so we can figure that one out. There is a question talking about why AQUMON's ESG investment portfolio only invests in stocks in Hong Kong rather than the US. In terms of data transparency, US market should be much better than Hong Kong. I think this is a great question because upcoming, we will actually be talking about both our portfolios. So we do have a US-based portfolio and a Hong Kong-based portfolio. So moving on to this is the US-based one first. So let's talk about that one. Dr. Lei, could you give us some updates on how our A Better World stock portfolio is doing recently and what we actually look into?
So for honestly speaking, in the last few months, our Better World portfolio was not beating S&P 500. The one reason is that the S&P 500 index was quite strong in last year. And the second thing is that but our Better World index performed quite well in 2020. If you look at our backtesting results, you will see that in 2020, these type of firms are performing quite well, and make those firms a little bit overvalued in the short period. Therefore, there was a correction for this type of firms in 2021, and this is also a type of result from the expectation for the rate hike and the high inflation, because we know that for this type of ESG performing firms, most of them are new energy and high tech firms, and they are all the giant firms. Therefore, these type of firms can, especially for the new energy and high tech firms, their valuation will get corrected a little bit during the rate hike, and especially before the rate hike, when we have a quite strong uncertainty about the rate hike.
So that means that currently our Better World kind of strategy really focuses on the tech sector in terms of ESG developments. So in that case, I mean, granted, the markets for the tech haven't been doing so well, and that's why maybe we suffered a little bit of volatility. Are we going to change our strategies in the coming months so that the performance will go up again? What is the planning here?
No, we do not need to change the strategy, and I should clarify that we are not. So for the Better World portfolio, it's not only investing in the high tech firms, but it is quite the portfolio has a little bit correlated with the high tech firms. A significant proportion of its portfolio comes from the high tech industry, and also from the say renewable energy industry and some other type of growth sectors.
Right. And I think previously, I'm not sure if we highlighted this, but how many factors do we look into when we select all of our stocks?
Usually we look at about 5 or 6 factors for our stock portfolios, and for these US ESG portfolio, of course, first of all, we will look at the ESG scores for these firms, and then we will pick up the firms with good profitability, growth, and R&D, because as I mentioned, these firms most of them are from the growth style or the growth sectors. Therefore, we look at their R&D expenditure to find out the firms with kind of long-term potentials.
So I guess back to answering one of our audiences, we do have a US portfolio. So if you want to, you can definitely check it out on our app. It's called A Better World. Now, going forward, though, the one that maybe our audience is more familiar with is our Hong Kong-based ESG portfolio. So why did we separate this out into a particular portfolio, and what's so special about this portfolio compared to our US portfolio?
Right now, actually, we do not have a competitor, or we do not. Before we have the AQUMON Hong Kong ESG portfolio, there is no product for the Hong Kong stocks for the to evaluate the ESG performance of the Hong Kong stock and put the Hong Kong listed firms with a high ESG performance together. So we do not have this type of product. Therefore, AQUMON hopes to generate this type of product for the investors, especially for the Hong Kong local investors, to have channel to invest in good ESG performing firms in Hong Kong. That is the motivation, and we do believe that these type of firms will have a long-run performance and generate profits for our investors.
And so I guess I'm curious now, what is the top 3 holdings? I mean, granted that this is all done by the system and our algo engines itself, I think the weightings show differently. We should have a top 3 holdings for the ESG Hong Kong, right?
Yeah, so the top 3 holdings for the current portfolios are China Resources Power Holdings, ENN Energy Holdings, and China Everbright Environment Group Limited. So as you can see that we have two energy firms and 1 environment group.
Okay, well that's very interesting.
Here, one problem is that you can see that these firms are all giants. So as we mentioned, most of the firms that reporting their ESG performance are giant firms.
Well, considering that all these, both portfolios, right, we are focusing more on the big guys, being that they have more resources to devote into ESG investing. How do we feel about in terms of the upcoming, if in terms of our core and satellite holdings, I would say, because if these companies are already long-term, sustainable, maybe even blue chip companies, right? Should our investors actually just invest maybe a core portfolio on ESG rather than a satellite? So what is the strategy we should do? How much allocation should we put into ESG?
So actually, if we look at it from a core and satellite perspective, I should say that ESG portfolios are quite different, actually quite special. So they should be a kind of between core and satellite, because or we can consider them as a kind of special satellite. Of course, from our asset allocation point of view, we believe that the core assets or the core products should be the asset allocation products to have a stable, robust, long-term returns. And for ESG portfolios, they do have a long-run robust returns. Therefore, we hope that investors, if they believe in ESG investing, they should hold this type of portfolio for a long-term, not to have this type of style or theme rotation frequently. And within the portfolio, actually, AQUMON is trying to help the investors to select and rotate the stocks to pick. Every month, we will try to pick up the best performing firms within the best ESG performing firms.
Okay, well, thank you for that. If there's any other questions relating to the portfolios, please put them down for the Q&A so that we can get back to you guys, because now we're moving on to the trends, my exciting part of this, right? 2022 trends we should be looking for in terms of ESG investments. So I think, as it says on the slide, we have 1, ESG will become more important in Asia Pacific, right? And 2, social factors will play a more important role. And 3, ESG reporting will demand more credibility. So let's go into these topics one by one. Let's look into the first one. And, Dr. Lei, please share your thoughts on this entire spectrum and the trends that are going to impact how we do our ESG investment in the coming year.
Yes, definitely. I think ESG will be more and more important in Hong Kong and China. And actually, ESG has already been important here. And in the last 1 to 2 years, we have several new products in the market, like Haitung ESG products, and we have other ESG mutual funds from China AMC, Hong Kong, and we also have our AQUMON ESG portfolios. And we have several ETFs in MSCI China Asia Index. And we have more and more AUM invested in ESG sector, and now investors trying to look at sustainable investment, sustainable products, and that is the fact about the ESG investment in Hong Kong and China in Asian Pacific.
Right. Sorry, I'm interrupting, but I was curious then, in terms of, we talk about Asia Pacific region, right? So who is exactly taking the lead in this APAC region when it comes to ESG investments?
So if we look at the AUM of ESG investment, of course, Hong Kong and China take the lead. And we know that in the third quarter of 2021, the total AUM in ESG funds in Asia reached $35.3 billion. Among them, mainland China and Hong Kong have largest ESG asset management scale around 20 billion US dollars.
And I believe like this will definitely be a strong driver actually for a lot of the investment markets here.
Yeah.
Just looking at the overall climate, right? I see like UBS has been talking about this. And in fact, I think they even came up with the research saying Hong Kong's been driving a lot of this ESG investment adoption, especially with the big multifamily offices here.
Yes, actually the AUME here in Hong Kong, I think growth around 400 to 500% in less than 3 years.
That's incredible. I'm glad we are in the eye of the storm, so to say. Okay, so is there anything else you would like to supplement for this particular trend?
No.
All right. Okay. Then let's move on to the next topic to deep dive into. So the next topic we're looking into is the S in the ESG. So accordingly, environment has always been the forefront. You know, we had all the different global summits talking about environment, climate change, but not so much on the social part of things. So my understanding is the social impact is going to be a huge factor in 2022. And it's actually an up and coming factor. Maybe we're just slowly going through the alphabets, E, S, and then G, right? Could you tell us a little bit more about how this will change? What interesting, little nuggets of information can we grasp from this news trend?
So here I need to clarify a little bit. So ESG is about environmental, social, and governance, but when we are talking this to most of our retail investors, they do care not about the environmental issues. However, they care less about social and governance. Therefore, I hope that today our conversation, our webinar could change this a little bit, because ESG is not only about the environmental issues, but also about the social issue and the governance issue. And I think the most important, the issue in the whole ESG evaluating system with the highest importance across all the evaluation system is actually within the social part, the working equality. And something like the workplace quality, and these are the most important issues within the whole ESG evaluation system across all the ESG scoring systems. And for the social part, I think the one thing for us to neglect it is that it is hard for us to quantify the social issues, for example, gender equality and say product quality, and it is hard for us to connect the data. Therefore, it is somehow we will put these issues down a little bit. However, as we have more and more data sources, now we can quantify them and connect the data about these issues. For example, for the gender equality, we can count the proportion of women or men in one firm, and for the labor income, we can have several survey data from websites such as Glassdoor. And we also have say product quality. We can count the number of records, and we have the community part for the social issues, and we can see whether the firm conducted charity or not.
Yeah, I guess granted, we are in a very, very active, wired kind of social setting nowadays. We have tweets that tell us what's happening, what's going down with a certain company. I mean, you see Goldman Sachs juniors, they're always, blasting off a lot of complaints on social media. There are also plenty of scandals. I mean, if our audience here we watch Netflix, I'm sure you'll see a lot of documentaries about higher up mismanagement. I would say even a little bit of abuse of their workers in some ways. So when it comes to these scandals, right, sexual harassment, whistleblowing, how are we able to quantify this at all?
Yes, right now we can structure these type of news data, and we can, for example, the easiest way is to have the number of negative news for a certain firm, and we can have more NLP methodologies to deal with the say the meaning of that news, to have score on each news and have a type of weighted average negativeness for the firm.
And I guess obviously all of this has to be weighted and proportional, right? I mean, granted, the bigger the firm, the more well-known they are, most likely they'll attract more negative news. So we can't just count it like a one-on-one situation, because then, you know, the big guys, Nestle, will definitely have a lot more complaints than your mom and pop shop.
Yes, scale, the size should be a scaler for this type of measurement.
I think what's happening here is actually really great, because we've always heard about bad management, bad social misconduct, and now companies are going to be more accountable for it thanks to all these ESG initiatives, right? We look into the data a lot more. So I think this is a great trend going forward. And so now on to our third and last trend. It talks about our credibility and how we actually can keep everybody accountable on the same scheme. So ESG reporting needs to be more unified, right, in order to have a broad spectrum overview of how each of the companies should be judged. Otherwise, the judging criteria can be all over the place. So give us a little bit more information about this trend itself.
Of course, I should say that the trend is good, and we have more and more firms disclose their ESG performance globally. For example, in Hong Kong, we have less than 250 Hong Kong listed firms have their sustainability reports before 2015. Now the number is 400. Of course, we have a growth there. However, there is still space for the improvement, that we have over 2,000 stocks listed in Hong Kong market. And another thing is that, as I mentioned, only giants report their ESG performance. Otherwise, no resources to do so. And the barrier is that the small firms funds disclose their ESG performance too costly.
Yeah, I think there has to be a way that we can integrate this into auditing, maybe as well. I know that the bigger companies are definitely taking a lot more heart when it comes to ESG reportings, but for small companies, it may still be preliminary stages. You're right, in the good direction, but I think it's still going to be a bit more of a battle coming forward. So the more people who focus on this trend, the more voice and power this entire movement has. And I think that is essential for actually making a change and keeping the companies accountable for their social impact, not even social impact, environmental, social governance impact onto the wider community, especially the big guys for sure. So right now, I mean, we talked about a little bit of sustainability reports. We did say, like, how many companies actually do have ESG reports coming through right now?
It's around 400 for the Hong Kong listed firms.
Right. And are those reports like properly trustworthy? Can we actually rely on those data?
I think for most of them can be trusted because they are audited, and but the problem is that they are not mandated to be audited. So it's not guaranteed that the sustainability reports are audited, and but from my knowledge, most of the sustainability reports from the giant firms, they have the resource to audit their reports. So the number can be more trustable. Yeah, and another thing is that as I mentioned, the sustainability reports only disclose whether the firm conduct ES and ESG behavior or not. The quality is still kind of mid. Therefore, I think in the future, we need to have more and more in detail disclosure for these type of things. For example, how many records and the value or the number in the carbon emission, something like that.
Mm-hmm. And I think granted, on the slide we have the newly formed International Sustainability Standards Board. I think that would really help in moving the needle forward when it comes to a standardized ESG reporting. So let's wrap up here on our ESG trends for the moment. As an interesting little key takeaway from our talk today, I think we can summarize as follows, right? The APAC region, specifically Hong Kong and China, will definitely be leading the ESG investments. And, when we were saying there are over 400 different, 4,000, was it 400 or 400 different ESG companies currently in Hong Kong already established. So I can't imagine how many more that would be coming out from China. And granted, if we have a more universal standard of keeping their ESG goals and metrics accountable, then this number, especially in China, could grow greatly too, with all the different carbon zero kind of initiatives, right? This is one of the ways to really keep track of them. So everybody should keep invested, put your eyes on the space, because despite what we're saying about returns, there are obviously portfolios that generate much higher returns, but can you really just put a quantifiable return for the upcoming development of the future, right? So I think for sure, I would recommend all of our listeners here today to really look into the topic, because you can also make a positive impact through your investments. Now, we're going to wrap up. Thank you very much for joining, but we have some Q&A time. I think we're going to probably give it around about 5 to 10 minutes, if you guys don't mind running over by 5 minutes. So this is the time for all of your Q&As to be answered. So roll them in if you have any. So just now, we have a question which says, how do you correlate ESG investment of a company to its investment returns? So obviously, heavy ESG investment does not imply high investment returns, right?
Definitely, I do agree on this part, because it's not that directly correlated. The ESG performance and the stock performance are not directly correlated. However, if we look at the firm's performance, especially its operating performance in the long run, that depends not on its ESG performance, because when the firm is more sustainable, its business will be good, will be good in the long run, and the return, the stock return for that firm will be more robust.
Okay, thank you for answering that. I hope you got the answer you require over there. We have another question from Rabia. From where was this idea of ESG investing first derived from?
So you mean the ESG investing, the whole idea? I think it is from, actually we have several generations of this type of impact investing. Back to say 1980s, 1990s, we have the type of environmental investing, something like that, and we also have, say, this type of social impact investing in the early 2000s, and then we upgraded all the concepts together. We have the ESG concept, and then we have the ESG investment in the last 10 years.
I guess the movement itself is pretty organic, and reaching to the culmination of what, in our 2020s, I guess, that's when people really focused on, sustainable, impactful investing as a key topic. All right, so we have another question from Jahan. How should a firm determine the percentage size of their ESG allocation?
So how should a firm determine the percentage size of their ESG allocation? So actually, I do not quite get the question. And
I think maybe what they're saying is perhaps maybe two parts, right? In terms of a firm, how should they look at investing into ESG? So like as an operating company, how should we determine how much percentage of their resources should go into ESG? And then secondly, as a company perhaps investing into ESG as a concept, how much percentage of the assets should we invest into ESG?
So for the first question, I think it depends on the resource of that firm. It's a trade-off. It's a type of short-term benefit and the long-term benefits trade-off, because we know that investing in ESG can be costly, but however, it benefits in the long run. If the firm has enough resource, it will invest more in these type of ESG behaviors. Mm-hmm. And for the second part, if there is a firm looking to invest in these type of ESG assets, of course, I will say that, I think if the firm is having a kind of long-term investment, you should invest more than 1/3 of its asset into this type of ESG things to invest in the future.
Mm. And would you consider ESG investments a risky investment?
No, actually, for these type of firms with high ESG performance, they are from two parts. One is that the giant firms, they are quite stable, right? Mm. And another thing is from another part is from the growth firms. Then they represent the future. Of course, there will be risks within this type of growth firms. However, when you have a diversified portfolio, you will have a good average return from a group of growth firms, right?
Hmm. I see. Okay, we have time for one last question before we wrap up. Last question is, let's see, what is your view on the upcoming Q2 for ESG trends and direction? I mean, granted, Q1 has not been performing as well as we would like, but what are you seeing for Q2?
I believe that in Q2, it will be better or even good for ESG investing, because as I mentioned, for the last year, why ESG firms did not perform good. The reason is that is from two parts. The first one is that they are a little bit overvalued due to the flash in liquidity in 2020 from the Federal Reserve Bank, and the second reason was that the market, there are more and more expectation for the rate hike due to the high inflation in 2020, especially in the second half of 2020 and in the first quarter of 2022. However, we will have certainty after the rate hike takes place in March, and when the uncertainty will be less, and the high ESG performing firms such as tech, new energy sectors, and giant firms will have more and more opportunities to rise. Therefore, I do have a good view for the ESG investing in Q2.
Perfect. Sounds great. It's looking, the future is bright. We do have actually quite a few more questions here, but unfortunately, due to timing, we might have to just wrap up for now. However, anonymous attendee, if you do have more questions based on our ESG portfolio holdings, our rebalancing, we will be sending off a short survey later on after this webinar, so that we can actually answer you on a one-on-one basis. So again, thank you so much, everybody, for coming. Please follow us on LinkedIn if you haven't already, because we will give you the most updated news. Any of the latest webinars will also be posted on it. And if you guys don't mind, please do fill in the survey that we're going to send off. It does help us make better events and webinars and content for you. And we hope you found this webinar interesting and informative. Thank you so much, Dr. Lei, for joining us today. And thank you, everybody.
Thank you. Thank you, everybody.
All right. Have a great one, everyone.
Bye-bye.
Bye.